Hey everyone, in this video I'm going to discuss Amazon's progress in bringing the company's profit margins back higher. Now, there's a lot that happened to Amazon's business since the outbreak that was both good and bad, so I'll elaborate on that in this video. So let's begin. Starting with what happened to Amazon's business during the early stages of the pandemic, right? Sales exploded, and Amazon was not ready for that kind of boost in its business. It needed to invest to increase capacity, right? More planes, more trucks, more warehouses, more employees to process all of that extra business. Well, that was great when sales were elevated, right? But ever since economies started reopening, Amazon was stuck with all of that extra investment because it's not like after you build a warehouse, you can unbuild the warehouse, right? That's there now. Those are costs that you have to endure now. Utilities on that warehouse, you got to pay for power bills, you got to pay for security, you got to pay for the people in there. Those are all extra costs that are now on the business. And let me show you what's happened. So right at the onset of the pandemic, Amazon's profit margins expanded because sales exploded, right? So Amazon went from roughly 4.5% operating profit margin up to over 6.5%, right? And now, ever since economies started reopening, Amazon's operating profit margin has collapsed 2.38% in the most recently updated trailing 12-month period. That's significantly below, even if, let's say, we ignore the time after the outbreak. If we look before, like in 2019, Amazon's operating profit margin in the trailing 12 month peaked at over 6%. They had done an excellent job over the decade in growing sales, in optimizing the cost structure and boosting that operating profit margin. That's now way down, way down to 2018 levels, to trough levels in 2018. So if you've wondered why Amazon's stock price has been down significantly off its high, this is majority of the reason why Amazon stock price is down. So it's understandable that in its most recent earnings conference call that management held with Wall Street investors, that one of the questions from Goldman Sachs research analyst Eric Sheridan was asking about the profit margin. Specifically, he said, "Can you give us an update on where you think those efforts are and how you're going to balance profitability and driving growth over the next couple of years?" So when are you going to match margins versus pre-pandemic levels? When are you going to get back to these levels of profit margins that you had before the outbreak? And the CFO first jumps in saying they're on the journey and making solid progress on recovering their cost structure. They've taken several steps accordingly, right? But he says there's still a lot ahead of us. Then the CEO jumps in and says, when you double your fulfillment center footprint and you also build the last mile transportation network that's the size of UPS in just 2 years, there's a lot that you have to work on to get that as productive as you want. And we're spending a lot of time working on that in the last 6 to 9 months. So it's not just the money that they spent to build up these networks, it's the logistics of it. It's optimizing it. What inventory do you put in these new warehouses? In what do you put in the previous warehouses? How do you optimize that network that you had to um, build in just 2 years, right? Amazon spent 2 decades, more than 2 decades, building out its existing fulfillment network. And then in 2 years, it doubled what it had spent nearly 20 years building out. So imagine the difficulty in doing that, right? Over 20 years when you're building that out, you get time to optimize with each one, right? You bring on one new warehouse or you bring on two new warehouses, you find a way to optimize it to use it the way to your advantage. Then you do, when you're done with that one, you add two more or three more or four more incrementally as you make progress, right? They didn't have that luxury during the pandemic. Sales exploded, right? We all were spending more time at home and ordering on Amazon a lot more often. So they needed to double that network in just 2 years. And so that was a really difficult thing for them to do. And they decided to just overinvest instead of underinvest in the network. And they said, we'll take the time to work on it as it goes. So that's the difficulty they're having. That's why the operating profit margins are down so significantly. And they're optimistic that we have a chance not just to recover to where we were before the pandemic in terms of operating profit margin, but I think there's additional upside with some of the opportunities we've identified. That's great news for Amazon stock investors. Is what management is saying is, hey, that's a good question, Goldman Sachs, but we'll take that question and we'll raise you one. They're saying not only are we going to get back to the levels we were before the pandemic, but we see an opportunity to get even higher than that. So that's really good news that the CEO is highlighting the fact that they've identified areas where they can boost the operating profit margin to even higher levels to where it was before the pandemic. Now remember, before the pandemic, they were about 6%. And this is like in when they were above 6% operating profit margin is when the stock price was at its highest. So if they can get back to this level and higher, the stock price could recover to where it was previously and perhaps even higher than that. So that's something that Amazon stock investors have to look forward to. That's something I've been following closely with Amazon with every quarterly update that they give me. I go through and I follow the progress they've been making on this front. So this is really good news for Amazon stock investors. But that's all I've got for this video. Thank you so much for watching. If you enjoyed it, please subscribe. I've got a lot more content just like this. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.